Hey, everybody. Today on the AgentXcel podcast, we have our guest, Greg Gale. What's up, Greg?
Hey, what's up, Chris? Thanks for having me on, man. I'm honored.
Yeah, man. Thanks for jumping on. I got introduced to you, probably about a year and a half ago or so. And just always saw you around at masterminds and things like that. And you always had so much value to give. There's something that's
Well,
just different about you. You get these lenders all the time that are just like, hey, let's do coffee and this and that. And you come from a perspective that I can tell that you're just always looking like, how can I provide value to the agents? And I feel like that's just probably naturally who you are. But that's also your way of probably getting business.
for sure. Yeah. And, coming from that place of contribution, but like you said, seeing me at all those masterminds, it's me absorbing all that information. And whether it's through, as you know, the core training that I coach for, I'm surrounded by big producers, and then locally here working with big producers and getting in the room with the right people, the right conversations just happen. And so but to then take that information and disseminate it out amongst people, it just, honestly, that's just my wheelhouse, is coaching and contribution.
Yeah. Tell me a little bit about yourself. So like, tell me, tell the listeners who you are, your lending company, and then just how you got into lending and just a quick backstory.
Yeah. So, I moved here from Massachusetts on a bet. That's a different story. But to go to college at ASU, and took me 8 years to graduate, but I'm not a doctor. I finally graduated with a degree in exercise science physiology, and I was pre-med, but didn't want to go continue on through medical school because I had already spent 8 years in college, the number one party school, by the way. That's why I was so long to get there. But I was a trainer. When I graduated with my degree, I became a trainer at a martial arts school, actually, and was running that, and then was contracted to train at a local high-end health club called The Village. And I was at The Village at Gainey Ranch when it opened. I was teaching martial arts there. And then I became a personal trainer for them because there was more money. My very first client was a mortgage broker, but that's actually not who got me in the business. She got my girlfriend, who's now my wife, in the business. This is 2005. So my wife wanted to get in, and she's like, hey, I want to get into real estate. And the broker's like, man, she should really get into mortgages. I'm like, would you hire her? And she was at the time managing a high-end pizza shops and stuff. And she's like, I'll talk to her. So she hired her. And this is again 2000. Now this was 2001. So for her, she was, on that come up for 4 years during the market. And she, secretary, processor, became vice president with the owner, her personal assistant, licensed, all that stuff. And then I was looking to get out of training. So now I was training a bunch of people, capped, no growth. You can only train so many people in a day. And so I was looking to make a move, and she said, hey, there's a top producer here that's doing a lot of deals, but looking for an assistant. Maybe this could be your step in the door. And I barely knew how to spell mortgage. I mean, she was in the business, but I didn't know anything about it. And I was like, well, I'll interview with him. So I interviewed with him. His name was JB, and we hit it off, and I started working for him. And this is 2005, 6, 7, right on that rally, and then into the crash. Near the end of 07, we were a mortgage brokerage. So for those of you who don't know, but a broker is someone who doesn't really do the loans themselves. They're kind of the middleman between the actual bank that does the loan. And he said, hey, man, this is getting ugly. I think they're going to start doing away with brokerages. And there became this suffocation about brokering. He's like, we got to go. And JB had this foresight, and he was a young guy, younger than me, and he just saw it coming. And so we started interview with banks locally. I have a picture on my desk of him and I going to Chicago to interview with a big company. And then in September of 2008, JB passed away in an ATV accident. So my wife had already quit the business. She was about to have our first child, and so she had no job. I literally lost my mentor and best friend at that time, and we were about to move because the market was crashing. And so I interviewed with my current company that I'm at right now, Nova, and it was only like the interview was set up for JB and I and our group. Oh, and wow. I walked in and said, hey, man, it's only me. It's my processor, and that's it. And then they took a chance on bringing me on. And so that's how I got into the business. And I've been with Nova ever since. It'll be 14 years in like 9 days.
Wow. So what did I feel like I know the new version of you, I would say, because I've only known you for probably about a year and a half. So I've seen
Mhm.
this like very leveraged out, somebody who has help and super cool. I mean, you really don't see it a lot in the lending industry, or I don't at least. I see it
Mhm.
more with realtors. I don't see it as much with lenders, but um, how did you go, Greg, from how did you go from that like lender that was doing loans for people and then figuring out like, hey, I'm gonna build a business and have some people help me and because you have a really cool process, I should say. Like when a lead comes in, I kind of joke in my office, I'm like, no lead goes left unspoken to. I mean, it's about the quickest a lender can get to a lead and start that process with them. How did you go from that lender doing just solo work to having help around you?
Yeah. So again, fortunately, after JB passed, I went to this event. Someone gave me a ticket to a leadership conference. And when I went there, it was like MLMs and chiropractors and stuff talking. There was no one real estate or mortgage there. But when I walked out, there was literally a table with the stack of CDs on there. And it said the core training. And I'm like, and I thought honestly it was a workout CD coming from a personal training background.
Yeah.
I'm like the core. I'm like, oh, it was a workout. So I grabbed it. I throw it in my car because back then the cars had DVD and CD players. And so I'm listening to this, and it was Rick Ruby, the owner of the Core Training, who is a national coaching company for lenders and realtors. I had no idea who they were. And I listened to it, and he says, chase realtors, that's your business, maybe builders, work on your sphere, have a structured process, build a team. And I'm like, Now I was the team member to JB. JB was the rainmaker. I was his assistant. So I
Got it.
learned the model from JB. But then when he passed, I had no mentorship. And so I signed up with the core, and they had the exact same model as him. Have a rainmaker, have somebody else to cater to your clients. And it wasn't to like push it off so you could go, screw off and play golf or something. It was literally build teams so that you could help and serve more people.
Right.
And I use this analogy all the time. I think we've been to restaurants that are short staffed and it's not a great experience. And the restaurant also doesn't have the person that takes your reservation, cooking your food, cleaning the tables, serving everything, right? And so we understand the model of catering to a client takes a team, meaning leads could come in right now and they need to be taken care of. It can't be right after. And so for a little while though, when I started, I didn't realize that, Chris. And so I was working, man, I calculated at one time because my coach made me do it. It was 84 hours a week that I
Wow.
was working by myself. I'd prospect during the day. I would complete apps and go through paperwork at night and structure and submit loans. I'd go home at like midnight. I'd get like 4 hours sleep, come back in the morning. It wasn't until Katie, my wife, said, "Hey, I feel like a single mom. This isn't going to work.
Yeah.
And you need to," she's like, "Do you need to just go get a 9 to 5 so you can be home at night?" And I was like, wow. And so I called my coach and he goes, "Greg, this is what I've been telling you. You need a team. You need people. And you think you can do it all by yourself, but obviously you can't. Like you're doing it, but how's the other aspects of your life?" I'm like, "You're right, man." So he said, do this, hire 2 people and maybe one will be good and stay. So I hired 2. The 2 worked out great. My business doubled, income doubled. And as you know, through leverage, the experience became better. My hours dropped, home life got better. And so that's how I learned that concept. And this over the years, it's been refining the systems. And I call it the playbook, but literally the playbook for everything that happens in the process. But you have to have the right people in place to handle that process.
Yeah. So that's how did you build that playbook? Because I've seen some of your stuff and I feel like you're so put together behind the scenes. Maybe it's different than what I see, right? But I mean, I see like you have these systems that you have in place. How did that get documented?
Yeah, it's basically, it started as some of those things are in existence already with the core.
Okay.
So I took what they were already doing and then I said, well, how am I going to do this? So like, when does the handwritten note go out? When does the call, the text, the email? Let's incorporate video. And so honestly, it's almost like an addiction or obsession with me is how do I improve the process a little bit more now? And like, even now, I think that we all have old habits from the old market. And with the new market, we need new habits and
Right.
longer journeys, so to speak, as the marketing people call it. But that journey of, when the lead comes in, it might take longer to convert because they don't qualify or they're waiting for the rates or whatever. So what is your follow-up that you had, a year ago? And even before COVID, it's just different now. So are you revamping and redoing those processes? So how I coach people is, hey, document what you're doing already. So document what your day looks like, document what your calls look like, document what that conversation looks like, and then go and audit that conversation and that journey and however process you have now. But once you put pen to paper, then you can then take a look at it and say, what changes do I need to make, and where can I make just small little tweaks to improve? And maybe you need to hire someone like you, say, hey, Chris, can you take a look at my business and show me where the gap is? Because you're really good at that follow-up. You're really good at the relationship game with your clients. What is it that you do? And I know you have it in writing. And so what maybe you can help. And so you have people that are further along than you that take a look back and say, hey, I'll help you out.
That's cool. Yeah, I have Kylie in my office that does a ton of documenting for me. I mean, that's one of her primary jobs for me right now is, I built something that, I had pen to paper and it was just my thoughts and is my little systems. And now almost everything that we do, I say, hey, Kylie, you do this, document it. I want videos and how to do it. I want anybody to be able to sit down at that desk and be able to do that if you're on vacation, sick, whatever. And I kind of feel like it can be outside of our personalities as like visionaries or leaders to get really down to that nitty gritty. I think we can do it at like a low level, but to get like very detailed, sometimes I just think it's like, that's not going to be the best use of my time.
Well, I think there's a cap to when you're winging it. Like everyone can wing it for so long.
Right.
And, I think it wears on you too, but at some point you just hit the ceiling, and to go beyond that. And I say scale, but maybe it's just to scale, your business so that it's more manageable and you can travel and do cool stuff and have limited time or more time with the kids or whatever, but I can be more efficient with my time.
Yeah. I think, man, I'm glad you hit that, because I learned that about 3 years ago. I was at a mastermind and someone was talking about, building systems. And, he said, some people want to build systems so they can close more production. And then some people want to build systems so they can close the same amount of deals they did last year for less work. And I was like, whoa, that literally changed my brain. And I was like, it really resonates with those people, because I talk to a lot of agents and some will be like, I don't want to close more deals. And I'm like, that's cool. Like that's actually, I like those agents that are like, hey, I close 30 or 40 or whatever the deals are, like, as long as it's reaching your goals and you're living the life you decided you wanted to live. You still need systems in place, because if it's taking you, 40 hours a week to close those 40 deals a year, what if it took you 20 hours a week to close those 40? Like your dollar per hour just went up, and your actually quality of life is greater. So I always say, like, it's not about how many deals you're doing. It's really, how are we doing this process where our dollar per hour is the most? And also just kind of on the team aspect, because you were talking about, we're talking about building a team, but I think that when you're doing good work, it's almost forced upon you at a certain point. I mean, it really is. I mean, if you're doing really, really good work and people are referring you business, there's some of us that are just like forced into it. It's not even something that was intentional. 100%. So you almost just have to like build people. You have to get people around you just to keep your reputation still good, because what else would you say? Like, no, I'm not taking that work. And I mean, totally cool if you do. I mean, you can if it's your life. But that's just a really hard one to reconcile. Like, no, I'm good. Like, got my 3 deals this week. Like, I'm going to pass on that referral. So you almost get referred so much that you're like, if I don't have help, I'm going to lose my reputation with these people. And then they're not going to refer me the 40 deals I actually maybe wanted this year. So I think it could be forced upon some people.
That's a good point, man. I think that's where tracking comes in too, because you might not see it coming. Like all of a sudden you're at that 80-hour a week and your wife's going, hey, what are you doing? And you're like, oh my God, I didn't even see it coming. And versus if you were tracking everything and you're like, man, my leads are going up, my referrals are going up, and I'm going to be forced into hiring some people. I need to learn from somebody who knows how to hire people. Cause I don't think, there's a difference between sales and management and leadership. So most people, like, it's like the cook, they're really good. And then they go to open up their own restaurant and it crashes because they're not good business people. They can't hire the people. They don't know the books. It's no different in mortgage or real estate or sales. They're a great salesperson. But when you went to make that first hire, man, you hired someone just like you, and that didn't work out. Right.
I'm training my ISA right now, my inside sales agent, and she just does 3 hours a day where we're on Zooms, and that's how we're doing our training. And I looked at her at one point and I'm like, man, I've just got a lot in my brain, meaning I'm just like, I just naturally can do this, but I'm like, I don't even know if I'm teaching you correctly. You're just
Right.
watching me do this. And I'm like, so then I'm trying to like step back now. And I'm like, how do you take what's in your brain and get it systematized? I'm like, there are questions that I ask in an order that I ask it. Now, can I shoot from the hip? Yes. But I'm realizing like you can't train someone new in the business to shoot from the hip. Like they can't
Right.
I come into the meetings from experience and I can just
Mhm.
freestyle the whole meeting and earn the business. But I'm
Yep.
like, you can't bring in someone new and then
Right.
talk to somebody. They're not being able to talk from experience, track record, reputation, client testimonials. So I'm like, all
Mhm.
right, I got to build this a little bit better as far as these are the questions you ask, and you'll learn your style around those questions as you go. But those are the questions to get to the point of where you're trying to go.
Kind of like you learned all those questions, and then you learned to be able to, then you were prepared to shoot from the hip, yet there's
Yeah.
still a certain flow and framework to
Yeah.
the conversation of the meeting.
Yeah, I was writing them down last night because I got a trainer again today, and I'm like, all right, let's start back from the beginning. I was like, let's go through these questions and figure this out. So,
This is where
Greg,
Kylie comes in again to write all those out for you.
right, right. Hey, so I wanted to my main goal of bringing you on, Greg. Just now that people know who you are, I wanted to get that foundation set. We're like now your skill, like your skill is you're a lender. You know what's up in the lending world. We're going through a different market now. Super simple when we've got like 2.8% interest rates, right? And we're like, hey, buyers, it's so much cheaper to own a home than it is to rent. And you like, I'm being serious when I say that, because it's like you realize like how your skills have to step up when a market changes. And a lot of
Yeah.
us have been around those markets, so we know how to get back to them. But man, is the transition sometimes a little painful just mentally having to figure out what the rhythm is again. So I mean, going to a buyer and saying, hey, it's 3.2% interest rate, you know, you're going to own a house for $600 less than what the, you know, rent would be in that area. Now we're kind of shifting now, and I've been seeing some 6% and things like that, and those conversations are definitely different. I hear a lot of the marry, you know, or date the rate, marry the house, and
Right.
that sounds good, you know, and I'm like, I'm not saying anything wrong with it, but I'm like, you know, what if they don't change? You know, we might have just sold ourselves, you know, sold people into a house that they can't afford.
Right.
Let's go over that. Like, you know, where's your mindset in the interest rates? How are you, what tactics do you have right now? Buy downs, all that kind of stuff.
Yeah, it's interesting. I look at it first of all I'm always the positive one. So I always look at like, what's the opportunity right now? Because I
Yeah.
think there's an opportunity in every market, and most of the successful agents and LOs will say the same thing. Like, there's an opportunity here, and maybe you don't see it yet. Just know that it's there or it's coming. And right now, the opportunity is the buyers, like the buyer that 6 months ago was having to bring in an extra $20,000 to even like have a chance to get a house, can now take the same 20 and buy their interest rate down and have a decent rate. And it doesn't matter if they refi later, or they can negotiate some seller concessions, because that's a thing now. And you're seeing that, right? We can see the seller concessions, maybe a price reduction, maybe you're getting repairs, don't have to waiver appraisals. Like, it's just a new market. And it's funny, right as we started to shift, I'd do a class and I'd have like 50 agents in the class, and I'd say, hey, who was here before COVID? And it was like 3/4 or more were new. And so they didn't know what seller concessions were.
Yeah. Mhm.
Right. It's like a whole new game. And the ones obviously before, like you said, have to resharpen their skills and understanding the market and what they're looking at using Cromford and things like that. But right now, what I'm seeing is the opportunity for the buyers. Again, are some just out of the game? For sure. For some of them, I'm like, this is too much of a stretch for you. You're so settling for what you want. They're 200 grand off from what the house that they really need in the area they want to be. They don't want to drive that far. Like, that's a thing. Those are the people where I say your journey of follow-up needs to be longer on them, because at some point when this does turn around, and again, no guarantees, but cyclically, we've had this business for a very long time. Just no one can put the finger on and say, yeah, it'll be next year, the rate will still come down. I don't know.
Right.
There's people that say it'll be 24. There's Fannie Mae came out, or Freddie Mac came out and said March or April. I'm like, we're going to see 4.5 in March or April. I don't see that coming, but no one knows. Right. So I have to do my best to put people in the right loan that helps them to, whether they afford or qualify, But some of the things that we're seeing right now, there's a difference between the permanent rate down buy down, and then you see out there the 2-1 buy down. So that's a temporary buy. It's called the 2-1 temporary buy down because it temporarily lowers your payment, not your rate. It just lowers your payment for 2 years or 1 year or the first year and the second year. So there's
Okay.
2 different ways to do that. And you've probably been seeing this, but you can have the seller pay and literally think of it like a little escrow account off to the side that's going to subsidize your payment. The payment is based, let's say your rate's 7. For the first year, it goes down 2%. So it's based off 5%. Your note rate, you owe the bank 7% every month, but the payment's based off 5 because the other 2% is sitting over here in this account and it gets funded every month for 12 months. So you have a subsidized payment. I think one of the banks coined it the inflation buster loan, which
Okay.
is, it's the same loan. It's just the seller's paying your mortgage payment for the first year or 2 years, and they're subsidizing the account. Now, the permanent buy down is where you take that same amount of money or less or more, whatever. I take that same seller money and I pay the bank to give me a lower interest rate forever.
Okay.
And now the difference with those would be, do I give the permanent? Let's say we had a client the other day had $6,000 was buying their interest rate down. And the payoff was like, it brought their payment down to where the break even was like 35 months. So that's like 3 years. So if you don't think the interest rates are going to come down in the next 35 months, that's a good one for you because it's permanently there at that number forever, guaranteed. Okay. If you are more of like the little gambler and you're like, oh man, I think that easily within the next 2 years, it's coming down. I'm going to do the temporary buy down because what happens, Chris, too, is let's say next year, miraculously something happens, market corrects, and we're like, and you get a glimpse, even a month of 5%. And we're like, dude, I'm refining. What about your credit that's sitting there in this little escrow account off to the side? You get it back.
Okay.
Now some banks will do the reduce your principal. Some will apply, like literally hand you a check for the thing. It's illegal for them to keep it. Let's put it that way. So somehow you get your money back. So that's something that people were asking me like, well, what happens if I do it, but then I refi in 6 months, I lost that money. No, you get it back.
How much can somebody get in closing costs? Like, what is the total? Like, is there a total sales price that one can get?
Well, it depends on the loan program. So for example, if it's an investment property, you can only get 2%. But on like, let's say an FHA loan, you can do 6%. So it depends on the loan program, and on a conventional loan, it depends on how much you're putting down. So it could be 3%, it could be 6%. So that's one where I say what I've been talking with agents right now, the messaging is, hey, get with your lender, whoever it is, and ask what is the max seller concessions on that loan, and how much roughly do they need right now? Because even though, let's say, for example, this gentleman at that had the 6,000 buy down, that was it. The buy down was just to get him the interest rate that he needed to qualify. So like he needed that money. Now he had the money, but he didn't want to use his 6,000. He'd rather use the seller. And so the agent can look like a hero right now when they're a master negotiator, which kind of started at when they researched the property to say, seems a little high. I'm checking the comps. I think I can get it down a little bit, but rather than get the price down, I'm going to negotiate the cost, because if I can save a client 6, 10, 15, 20 grand out of their pocket, keep it in their bank account, I, the agent, am going to look like a hero. I am going to get more referrals from that person.
Yeah, and that's the one. I mean, that seems like the key right now is figuring out how to do something creatively with the seller's money, because it's like they're not having any problem with the appraised price because the appraiser can look, 6 months in the past. So it's like we're not having any appraisal issues. Obviously when the market turns, like we're in a supply and demand issue now, making the prices lower, but that's not saying that they weren't higher a few months ago for an appraisal. So that, I think like what you're saying is perfect. It's going to be, figuring out how to, figure out how to structure that deal where you have money from the seller to do what you need to do to afford the payment.
Yeah.
And
well,
so, but
also,
I think that's, it seems as if there's like the trendsetters. It seems like it's like in every market, it's got to take the trendsetters that go out there, and as the market's changing, it's these realtors out there that are really in tune with their businesses. They know what they know what they got to do to make deals happen.
Yes,
And I feel like that still has to like keep happening probably for another like 60, 90 days.
for sure.
And then as that happens more and more, like all of a sudden the realtors that maybe don't do as much business, they start catching on, and now they're going to more and more classes, and all of a sudden like it starts turning. But I feel like we're always, when a market's turning, we're on that cusp of like, it's just new. So like you're having to explain to even some listing agents right now. You're just like,
Right.
really, like, you know, I remember I wrote an offer the other day for like 15,000 lower than list price. And they're like, seller will never take this. And I'm like, good luck with that attitude right now. I like, we're taking 50 and 60,000 less for our listings and I'm happily taking them right now.
Right.
So I feel like
Yeah,
it's
like
just
you
got to
said,
be
there's
more
that
of a trendsetters.
there's a transition period, right? When things shift, where things have to then catch up with them, right? And so I think that's actually, you brought that up. We have a lot of seller strategies where we're making the marketing flyers for open houses and listings that just says seller willing to contribute up to $20,000 for rate, buy down, and closing cost coverage. Like they're advertising it so they can attract more of those and make it
perfect.
easier.
I'm actually going to utilize that now, just that you said that. I mean, I've had that in the back of my head for a few weeks, but if I learned, you know, something from this podcast, which I learned a lot, but I'm going to utilize that one now, because I mean, I'm going into my listing appointments right now, letting them know, like, we have room to lower, right? Like they just know, I mean, if it comes in 20, 30, 40 lower, we're having a good conversation about this.
Yeah.
I think that you're right on that. It's going to be advertised to the world. Advertise to the world what what you'll do. It's almost like propose the deal to them now. It's not vice versa anymore. It's, hey, well, this is what we're willing to do for you to buy our house.
Well, like you said, there's certain buyers agents that are already there and get it and are looking to come in that way and get creative, but there's a lot that aren't. So you as the seller and listing agent have to almost present it as a layup for them, saying, hey, we're willing to do that. And they're like, whoa, okay, great.
There you go. Yeah, man,
Less
that's
friction.
Good stuff. What would be some other tips you'd say? I know you got a hard stop here in about 2 minutes. So just some last parting words of just techniques for realtors to just have in their back pocket to get things accepted and have a better time in this market.
Well, I think that right now is knowledge is power, and you need to learn about get with your lender about the non-traditional mortgages, the bank statement loan, the DSCR loan, the asset depletion loan. Like there's other loans out there. You also need to get with your title partner and learn about wraps, seller carries, contract for deeds. There's going to be some creative financing right now where a seller would do a seller carry at 5% because they're so uncertain of the market right now. And that will get them a lot of money because their payment is like 2.5%, right? So that's a smart money decision. But we're now seeing wraps and seller carries all coming back to the market, which haven't been around for, I don't even know, 7, 8, 10 years.
Yeah, not needed when your interest rate's 3%.
Right. Yeah. So again, education, right? So get with your lender. Hey, what's some unique, crazy programs? Like we just talked today about the rate buy downs, like getting your head wrapped around that, but then how to market that to your database, how to market that to get more listings, because you're now the creative, more knowledgeable agent, knowing those loan products, knowing the wraps and that stuff that the title partner can help you with.
Yeah. And that's, I mean, you said it best right there, man. It's not always just what do we have to do? It's how to market it. I think that's so good on what you said. Like we can have this knowledge, but it's how do you get in front of people? It's getting in front of the people that know you and delivering a message. Like what's your commercial to all the people that know you? And I see that you do that well. And I was actually going to ask you this. It was one of my notes. How do you have 87,000 Instagram followers?
I'm about to hit 90 on TikTok.
Really?
Yeah.
How are you pulling that off?
I'll tell you, it's the consistency of doing that, of just being consistent with it, right? So when it first launched, I was very consistent with the postings, and then as the algorithm changed, I just went harder on it. Now video is the biggest thing, so you'll see most of my feeds all video because that's what the algorithm likes. Yeah. And then I point people there. Hey, follow me on Instagram. Check out my TikTok. It's all informational stuff. You'll never see me dancing.
We're gonna have another conversation about that sometime.
Would love to.
That one, I looked yesterday and I was like, 90,000? I was like, this dude's getting influencer style. I was like, let's see him paid ads now. People like, you're gonna be holding some protein shake and you're gonna have to say sponsored. Like he got 10 G's for
thinking about it. Hey, I'm in the
Yeah,
mortgage business. I might need to subsidize a little bit.
Greg, man, I appreciate it. How can people get in contact with you? You're like a wealth of knowledge. I mean, you know the insides and outs of lending. And I think that's what you need right now. Just it's always comes down to no matter what markets happen, it's always go to somebody who's in the game at a high level, who's always learning. How can they get in contact with you?
Yeah, thanks, man. And I appreciate that. And look, I'm on all the social platforms. So if you look up Greg_Gale_, you'll see, you can be part of my 80,000 on Instagram. My cell phone number, you can call me directly. It's my iPhone. It's 602-743-4679. And no matter what market you're in, I'm happy to help.
Cool, man. Greg, I appreciate your time.
Thanks, Chris.
Hey,
Thank
bye,
you.
buddy. Bye.
Bye.